Uh, we're gonna take two here. Welcome to Benzinga's pre-market info show, brought to you by OptionsHouse. Joe, how you doing this morning?
So nice he said it twice. I'm doing great, Joel. How are you?
Not too bad, not too bad. So, what was the topic of discussion last night with you and Dina at the dinner table?
Mostly we watched the series or season finale, season 4 of Boardwalk Empire finally. So, she was on the edge of her seat the whole time because we all know how season finales can be, and that was pretty much it. And then I think she did some. We both were working on stuff and went to bed. So nothing too exciting. How about you, Joel? Please tell us.
Well, we had a little bit of a stock discussion at dinner last night.
So you take your work home with you.
Actually, Lisa initiated the conversation, and she started with she came up with two buy recommendations.
Is that a fact?
Yes, and she's pretty choosy with their stocks, and the two stocks that she chose were local stocks.
Well, you got to be choosy at some point in time because she's already stuck.
Oh,
with
she's
you.
not choosy.
Sitting on our edge of her seat here,
Okay.
Joel.
The
Which
two-
stocks are we talking about?
General Motors,
Oh.
Is that local?
yep, and Fords. Now,
The big automotive. From
yeah,
the automotive
she has started
capital
coverage of the
Ford
automotive sector with a screaming buy. And why do you think that she, an inkling, and it wasn't technical related, why do you think she chose those stocks?
Is it because of the new Mustang being unveiled today for global markets?
Now, mind you, Lisa works about, I'd say, 2 miles from the house. Is in the car for 3.5, 4 minutes each way. And she heard.
No. I got one more guess. She took a tally of all the GM and Ford cars she saw on her way to work.
Nope, wrong with that guess, too.
Or she heard on Detroit radio that automotive sector is turning around.
Close, close.
Conflicts there.
She heard that Kyle Bass was
Kyle Bass.
Yeah, was making a big play. And then when she said that to me, I'm thinking to myself, there's no way that she heard that Kyle Bass was moving into the into the sector. There's just no way. It's fundamental news. And sure enough, she heard it. And so I didn't break out the charts, though. I'm not that much of a loser. I don't break out charts at home.
To show your
I
wife.
go
Well,
downstairs
here's the
and do that.
technical formation.
Yeah, I told the Fords, Lisa, it's got to get through 1720. We've been talking about that level forever. That's a major resistance point. So I talked about that a little bit, and then Ford is just not. It's the recall on Dana's Escape
Escape A.
Escape.
is making me very unhappy too. But technically, it does have some good support. 1649 and 42, double bottom there. You also got a low at 1635. So I told her, if it holds 1650 here over the next couple days, we'll look at it. And then GM, that stock just keeps getting up to the all-time high, Dennis. And
Hit a new high yesterday, but then just kind of peeled back a little
did it make
bit.
a new all-time high? Are you sure?
Well, it's a new.
No,
all
Dennis.
new all-time
52
high
week
since
high.
the-
You're
Oh,
wrong.
yeah, since-
No, you're. Oh, it did. That is.
Yeah,
That 39.62, man.
39.62,
Yeah.
but then it pulled back and closed kind of in mid-range at 38.71. So
Yeah, why did you
if
buy?
you can call that a new all-time high. If you
Dennis,
consider
did you short it?
structuring.
Did you short it? The reason you know that is you shorted it at 61. You covered it at 62.
No, but I would probably do something like that.
What's your outlook on these stocks, Dennis?
You know what? I like the GM chart a little better than the Ford chart, but I mean, it's been the whole thing to buy the dip. We saw that in the banks the other day. They pulled back a little bit, and everybody jumps in there. So I don't know. You are sitting on support here on the Ford. So I'm looking at that Ford chart. 1645, the low back on the 8th of October. We had a low 2 days ago, 1642. 1649, the low yesterday. So there is a lot of support right around here in this whole 1640 area. So, I mean, you're still holding support there. GM support's a little bit higher probably. That whole $38 level where we got to yesterday, we have bottomed out there multiple times. So I like the trend on the GM chart a little bit better, but it's been the thing in this market to come in and buy dips, and Ford had a big dip yesterday. So
Dennis,
who
what's
knows?
your take on these names now that Lisa has a screaming buy rating on them?
That changes everything.
Yeah, okay.
It's especially because she heard it on Detroit radio.
Should we get Lisa on the show to give us a little bit more color on this, or what she envisions will happen with the stock?
She's probably pretty busy right now, so we'll have to maybe for a holiday show or something. We'll get her in. But Dennis, what's your strategy here? We got the unemployment number tomorrow. S&Ps are up a little bit. Kind of a volatile day for the index yesterday. Sniffed at $1,800 level and then had a screaming sell-off. Got under 1780, came back, closed mid-range here. So you think we're just gonna waffle today ahead of the big number?
I mean, resistance is very well defined now. You talked about when we broke down through 1801 and old support becoming new resistance. We got up there a couple days ago. Yesterday we got up to 17. What was the high? 99.5 or something,
Yep.
just under the psychological 1800.
Yep.
So I mean, resistance very, very well defined. Every time we get up to that close to that 1800, there's somebody taking a piece off because we can't seem to get up through that area. The vicious sell-off makes, support a little bit lower, too. Where are you finding support on this index?
I'm going to go ahead. I mean, 1777.75.
Yeah, that's 16 points down.
That's 16 points away here. I don't think you're going to see that today. I think you're just going to spend some time in the higher 1780s and the lower 1790s. Just have basically a little bit of a chop fest. I'm not looking for a big move in the index ahead of the number.
You gotta love this gold too. Here it is, the market. Oh, market's stabilizing a little bit. Kill gold, sell gold. It's down $18 here this morning. Gold just cannot find any life here. Every time it gets a little bit of life, it seems like the next day you come in and it gives the entire gain back here. We're at 12.29 on the futures here this morning. What are the technicals saying?
I don't know what inspired that rally from the 1210 area. I believe that was the lowest the contract had traded since July. Turned around on a dime and snuck back up into the 1250 handle. I was looking at, I'm hoping it was going to get a little bit higher because you had a series of highs around 1255, but 1250 turned out to be the number. Closed at 47.20. Had a $4 lower open. You're short in that open at 6 p.m. last night. You didn't take any heat because got right down. That was the one tick higher and then went down to 1227.80. I think it's going to be a little tougher getting down to this 1210 area again just because you had such a rip-roaring rally. So let's see if it can sneak back down into the upper teens, and that's where I think you'll find support.
We got lots of news here today. Let's start with one of your favorites, Joel, Apple. It's up significantly here. Potential deal signed with China Mobile. They've been talking about that forever. Finally, it looks like that deal is going to get done, and the stock is trading up $9 on it. China Mobile CHL is also trading up $1 on that news, too.
Right, nice move here. Let's check out the pre-market trading, just because that's what we have to look at here. We did trade higher. 576.50 was a high in the premium. Yeah, that's the high. Pull back, finding support at 572, just here in the pre-market. You need to get a break down to the 569.19 to fill the gap. So below 572, I'm sure you'll find some support at 570. But just Apple is acting like the Apple of old.
It is. It really is.
Yeah.
That's exactly what seems to be happening here. It's like it just caught its legs from like the 2012 and the middle of 2013 when it had the huge run up, and obviously, or actually, 2013 it sold off, but I mean all beginning of 2012 we were up. Seemed like every day we were up, and it seems like in the last 2-3 months here Apple can do no wrong. It's a big deal for them, so obviously trading up $9 here. And to be honest with you, I look at the charts here, I don't see that much till 594. You see anything in there?
Yeah, I had to go back to December 4th of 2012, just about a year ago. The stock hit a high of 581.80. $7 away from there, so $8 away. So that's the next resistance point. If in fact you can clear that pre-market high of 76.50.
What about the CHL? If people are trading that on this deal here, I know it's an ADR. I don't love trading those, but this stock has been breaking out too, and it's obviously up another $1 here. What's the technicals look like on that one?
That is breaking out. Closed right near the high of the day in Wednesday's trading, getting another move up. I mean, I guess they don't like this deal for them as much as they do for Apple. That 55.11 yesterday's high was close right. Well, 55.11 was the high, 55.03 close. You're getting fouled through here to the $56 area. The next resistance point I see is the really nothing in the rest of the 56 handle. Two highs between 56.95 and 57.13. That's another buck away from here. Not sure it's going to have the Momo to get there today. Pre-market high 56.50. They're not trading this thing as much as they are the Apple.
No, Facebook here, General Growth Properties pulling a fast one on them. It is GGP that is going to replace, is it Molex? Yeah, that's coming out of the
Molex,
S&P
yep.
500. And Facebook, they thought might go in. Nope, not the case. So they are buying GGP as it's going into the S&P 500. And Facebook actually is selling off because a lot of people were speculating that they were going in, and that is not the case. Facebook has traded 251,000 shares here this morning. It's down 70 cents. So it was a big update here for Facebook yesterday. Is this the pullback people will be coming and buying this one, Joel?
Well, it did go up on that UBS report, so you probably got some scrambling short cover. Looking at this 47.80 low here in the pre-market, really it's been hanging out there quite a bit. So it holds 47.80. I think we're going to have a chance to go up and trade into yesterday's range. Yesterday's high 40. What was yesterday's high here in Facebook? 48.77. So and the close was right up there. So now that you've been trading down 70 cents, expect the resistance to move down off that high 48.77. The close 48.62. So that's going to be your resistance point. I just don't think it's going to give it all right back today.
I think that UBS analyst or strategist that made that call yesterday actually made a similar call at the end of October that obviously didn't play out. So next time you see that rumor Facebook's going to be in the S&P 500, check the source, make sure it's not a UBS guy or gal.
Also, just a quick note here, looking at that Facebook, it started to get up near the November 18th high, 48.84. That coincides with that 77 level, the high that it made yesterday. And I was thinking about that, a late day fade, because that thing, a lot of times Facebook reverses itself overnight, but could have played a cheap in the money option on it. Probably make a little bit on it, but a lot of room underneath that pre-market low of 47.80. Start to get down to the double bottom at 46.26 and 29 from Tuesday and Wednesday's trading.
Let's talk about some earnings stocks here. We got Aeropostale reported last night, symbol ARO. They lost money, surprise, surprise. They were supposed to lose 24 cents. They lost more than expected. They lost 29 cents. 514.6 million versus 520 million, so they missed on the top line too. KeyBank likes something in it. They're actually upgrading the stock. It doesn't matter. The stock's still down 40 cents on the disappointing earnings report. It's trading at 8.90 right now.
It was lower in the session, traded down to 8.24 and got a rip-roaring rally.
I think that was the KeyBank came out with the upgrade, and then it rallied off of that. I think that's what happened.
Very little volume traded there, under 830 here, a grand total of 900 shares. And then you got the race back up to the $9 level. Nine's been really holding up in the pre-market, so use that as a resistance point. If it gets above there, you're going to get into yesterday's range at 9.25. That would be the low. That would be your super major resistance. Coming back on the downside here, you did have a couple lows ahead of that pre-market low at the 864.68 level, so call that 866. Your first minor support level, then below that the pre-market low of 824.
Also had another apparel retailer reporting last night. Guess GES beat 40 cents versus 38 cents. Revenue pretty much in line, 613.5 million versus 613.56 million. So we'll call that a match on the top line, a slight beat on the bottom line. Stock was trading a bit last night, Guess, here off of this report, but it is very, very muted here this morning. It has not even traded one share. Best bid is down at $33. Best offers up at $34. So very muted response to this earnings report from Guess.
What didn't somebody like right at
They
the
sell it right off on the earnings.
yeah
Where
they
did it get down to?
31.50.
It got down to 31.5. Somebody got a little bit too excited. News algo. We're going to talk about that today on our information arbitrage webinar, which is going to be at noon. We'll post a link in the chat if you guys want to sign up to that. But yeah, sometimes these news algos they just overshoot, and
Well,
that looks like a complete overshoot there.
someone dumped a piece there, Dennis. 87,000 shares traded in that bracket.
Institution, maybe.
Yep,
Yeah.
yep. Someone
Wow.
with the fat finger and immediately rebounded here. Just kind of consolidating here around the 33.50 area. So you got to take out that erroneous print. Go to yesterday's range, 32.92. That was a low. That's your first support point. And it's interesting. It's trading right at the high at 33.50. So opening into resistance here. Gap down yesterday for some reason, but I use that 33.50 number. If it can get above that, hold that. It's off to the races. Could be trading, in the 34 handle. 34.40 was your high on Tuesday.
Major resistance up there in the 34 handle. You got 1, 2, 3, 4, 5, 6, like 10 tops. And is that a formation? I don't know how many. What do you even say? Deck or DEC? I think it is when you got 10 tops though.
That's
34.80 major up there. 34.50, 34.60. So I just see resistance all over the place in 34 handle. So obviously, if it starts to get up there, you may find sellers there again. I'm not sure if it's going to go that way or not. With the vicious sell-off it had after hours there. Now it's coming back to flat. I'm not sure if it'll have the legs to get back into the 34 handle, but if it does, might be an opportunity. JOSB also reported earnings. Joseph A. Banks. And stock 51 cents versus 49 cents. Slight beat on the bottom line, slight beat on the top line. 247 versus 244 million. Stock is trading up 91 cents here. They obviously got the merger going with MW, so that's going to obviously move with this as well, I would think. Or is that a cash deal with the MW? How is that? What was the deal?
I don't know. I'm so confused.
Because one was buying out the other one, and then they were buying each other, and who knows what's going on there. Regardless, JOSB is up here 91 cents in the pre-market.
Yeah, trading above a super major resistance point. You did have 57.59 as the former high of the move here after that last merger was announced with Men's Warehouse. Let's take a look at the pre-market. Got even a little bit higher than that. Got to the $59 level. So we use 59, the pre-market high, as resistance. Do they have those in Canada, Dennis?
Joseph A. Bank?
Yeah.
I don't know, actually. And we have Men's... Well, actually, I don't even know if we have Men's Warehouse. I think it's called something different over here, but it's owned by Men's Warehouse. I don't know if we have Joseph A. Banks at all.
I like Joseph.
Probably in Toronto. Usually Toronto has everything. In Windsor, we have nothing.
I like Joseph A. Banks. I do. I mean, not.
What do you buy when you go to Joseph A. Banks?
They got these great deals. I mean, you never can just buy one. It's like buy one, get two free. Buy two, get two free. It's everything. So you go in there and they have these dress shirts that not super expensive, $40-$50. I go in there. I get one, I get two free. I get 3 shirts, I'm set. So I like it. I like the deals, good quality, man. You can just boom, throw them in the wash and don't have to get them, dry clean like my fancy shirts and stuff. So I like it. I'm upgrading Joseph A. Banks to a buy.
Dollar General also reported earnings here this morning. 72 cents versus 70, 4.38 billion versus 4.43 billion. So beat on the bottom line, slight miss on the top line. Stock is rallying here. Had a decent reversal day yesterday. We always like looking at these reversal days here. Stock spiked. You can kind of see the V bottom if you go to the intraday chart when the stock spiked all the way down to 55.56. Found some buyers straight up to 56.37, so closing fairly strong above the critical support of 56. I always like to see when it's breakdown. It's kind of like that Tesla thing before, where you get the breakdown, and then it catches a few people, dumping that were leaning on the 56 area. Maybe catch a few people short, and then goes straight up, doesn't give them a chance to cover. And now all of a sudden, you get an earnings report. It's up $1 here off this earnings report, and the chart all of a sudden looks a hell of a lot better.
Right, did have a double top at 56.61 and 56.62. We did blow through that here in the pre-market, trading higher. Looking at the pre-market high for this issue, we're right here right now, 57.70. Things are kind of wide open here, Dennis. You did have a high at 57.74 back on the 29th, so opening into a little bit of resistance. But if you get caught short going, if going through that level, there's really not much stopping until you get closer to 59. A high in the 25th at 58.80, and then a high at 59 right on the kisser on the 26th.
Let's move on to the analysts here. We got lots of big moves. After hours last night, I don't know when the analysts started coming out and doing after hours downgrades. They usually come out pre-market, but they're starting to come out after hours here
They're
now
making
too.
up for taking all that time off last week.
Is that what they're trying to do? So now they're coming out after hours too. Because Deutsche Bank, right after the close, comes out, downgrades Citi, downgrades Morgan Stanley. And I see the sell-off happening, and both Citi and Morgan Stanley, like, why are these two banks selling off? And then it pops up, oh, downgraded here. I was like, man, that is so weird that they're downgrading after hours. Because usually you don't see that. Usually they are always pre-market. So big moves down though last night for Citi. I'm telling you, Citi got down I think to the low 51s, and Morgan Stanley was trading down in the mid 30 handle. They have rallied back up from those levels, still trading down though. Citi's at 51.66 right now after closing at 52.04. That's a second downgrade in a row for Citi, is it not? Didn't who was it that day before? Was it Goldman downgrading them?
Yeah.
Goldman. Yep.
Yeah, so you had Goldman downgrade him day before. Now Deutsche Bank downgrades him yesterday, and they actually shrugged the Goldman downgrade off. It opened low yesterday, right near the lows. Man, if you were picking the bottoms, I wasn't picking the bottoms, but somebody was. They had a good trade because it opened right around 51.05 and straight up all day with the market rally to 52.05. A lot of the financials, like we were saying, did turn around here yesterday. But now you get Deutsche Bank coming out and downgrading the stock again.
51.05. You're right, Dennis. You did hit that right off the open down $1, and then rallied hard. Got to 51.36 in the pre-market. I was hoping this thing was going to get a little bit under 51. You had the multiple lows, the 50.80 area. That
Big
did,
number, yeah.
So I'm not too worried about these downgrades unless this thing finally, takes out that 50.80 area, closes below there, 51, and put a little bit of hurt on it. Let's see. I haven't looked at Morgan Stanley in quite a while here. About cleared that monster $30 level. That was huge. Haven't looked at this stock at all. I used to trade this thing all the time. Opening right into support Tuesday and Wednesday's lows, 69 and 78. Let's see if they got it through there. Pre-market just kind of a stray chart here, but holds in here 3060, 3070. I think this downgrade will not have much meaning as well.
Morgan Stanley, what's your thoughts on this one? Where did it get down to first off last night? Because I was actually trying to trade the Morgan Stanley a little bit last night on the downgrade. Didn't it get down to like mid 30s or something? You got that after hours chart?
Yeah, I do have the after hours chart. It's really kind of scattered here. There weren't a lot of trades.
It was widespread. Once it got through like 30.90, 30.80, then it just opened right up. So there was like really nothing in there. It was like 30.50 bid to 30.85, and there was like no market, a really wide market there for a bit on it.
It can't get through the pre-market low. It's 30.76, and that.
Is that what it? Oh, after hours it didn't get lower than that.
No, it's just
kind
of sitting here. It's just sitting here like a dog. So I'm looking to see it gets a pop out. See if this 30.70 level can hold. If it doesn't, things open up to the lower 30 handle. Minor support 30.43. But the real super major support that really you gotta love here is the four lows you had between 30.19 and 30.23 back in mid-November.
I don't think you have no chance of getting that low on
No
this Morgan
chance.
Stanley. And we talked about some of these banks yesterday having reversals. I know JH3's been watching that key bank, and it reversed big time off of that level yesterday. Getting back up, from the lows, almost to the highs, got back its entire losses from the day before, closing near the highs. These entire sector, all these banks yesterday were very strong.
Yeah, JH3 was getting a little bit worried there on the sell-off here in Key Bank. Did find some support here ahead of the low. And interesting thing too, a lower price stock like this. Look, you had a 1258 close. Okay, look at
Yeah.
the low, 1257, and then boom, it took off to 1288. So we talk about highs and lows quite a bit on the show, but folks, pay attention to the close too, because that's where traders and institutions are marked on their positions, and also a lot of your technical traders that are keying off trades off the opening print and early morning trading. That close is a big number as well.
Couple other major downgrades here. Target again. Seems like Target gets downgraded every other day. Target getting downgraded today by Bank of America. So just when you think it's starting to turn it around, and I tell you, this Target, the $62 level is absolutely enormous. We made a low back in October at 62.03. Yesterday we got down to 62.20. So even as we're approaching that 62 level, it is finding buyers here. We are trading down 60 cents right now at 62.70. Man, if I could get a shot down there in the low 62s, I think I might even take a shot on this one too. But Bank of America not liking the stock.
Yeah, very few trades in this, so I would go to yesterday's chart. 62.20, that was the low. Got a nice rebound on that. Closed off the high by 27 cents. So that close, if you rally another 40, 50 cents off this downgrade, use that as resistance. And that $62 level you had previously mentioned excellent support. 62.03 was your low on the 8th, and 62.13 the low on the 9th of October.
A lot of these analysts coming in and downgrading into the strength yesterday, and ExxonMobil had a really good day, was trading up. Today Raymond James comes out, downgrades stock. Stock is trading down 50 cents here in the pre-market, went out at 94.67, which was near the highs of the day, is now trading 94 and a quarter. So ExxonMobil here giving back a lot of yesterday's gain.
Yeah, that did kind of just snuck back up here on us looking at this issue. Filled the gap from the Warren buy nicely. Then held the 93. Held the 93 level Monday and Tuesday, and then held 94 yesterday. You're 30 cents away from yesterday's low, 93.92. So keep an eye on that. That support needs to hold. If so, we'll drift back up into the 94s. If in fact that 93.92 does not hold, you do not have any good support down to 93.23. But I just don't think this is going to be like a washout day on the downside, and I just don't think it's going to be a rip roaring rally on the upside. I think.
You think we're just going to be quiet ahead of this
Yep.
jobs number,
Yep.
like a tight little 8, 9, 10-point range?
That's
Is that
what
what you're
I'm.
thinking
Yep.
from today?
Yep. That's what my historical data in my mind is telling me.
We're 5 points away from, or 6 points away from the major resistance of 1800. So that could be the case on the upside. Just don't know where support is. If for whatever reason we started turning around, start selling off. I don't think so either. I think they came in yesterday. It was kind of a reversal day. They were buying the financials. They were picking bottoms in other stocks too. It seems like every time we pull back, you get this 1% pullback now. I mean, literally, or 1.5% since what was the high? 1809 was that the high?
1812.50, Dennis. 1812.
So we got 1812.50. What did we get down? 1777. So we're talking about 23. We're talking about 30. So maybe we pull back 2%, just under 2%. That's the pullback we get. You used to get like 5% pullbacks, 10% pullbacks. We don't get those anymore because everybody is underinvested. This market just, every time you get a pullback, people are like, get me in. I need to be in. I need to be in the market. They all sold them back in the financial crisis. Now everybody seems to be buying it up here at the highs. So eventually that sentiment will probably turn, but I just don't see what's going to derail this. Like, even I was talking with some other traders yesterday. What is really going to derail this market? And, is it going to be the tapering that's coming up next year? But that's not until next year. What's, the catalyst here to really give us a sell-off?
We do. I mean, if you really, of course, I can come up with a scenario, but
Mr. Bear.
I just want you to know I threw in the towel on those 181 spider puts yesterday. I just that move back up to 1800 made me very uncomfortable.
Yeah.
So then when we came back down in the 1780 handle, I just was like, hey, enough is enough here, and then. after I took it off, it dipped down to 1777,
Big
75.
dip,
I
yeah.
was surprised. I was really surprised. I thought it was just gonna, one of the days where you go up, you make it high, you come down, you test the low, and then you just kind of waffle. I'm not sure what the news. I know that there was a little bit of Twitterness out there that they evacuated the White House or something, and I don't know if people hopped on that, but that seemed to be after the big sell-off here, and
Yeah.
kind of glad I did now because we did drift, back up into the 1790s, and I was just losing that time premium. It was killing me, so I'm kind of flat here. I just don't think I'll take a position going into the number though.
Speaking of Twitterness, did you see that Twitter rally yesterday? Holy cow, right off the open, they came in with their buying shoes on. They pumped this thing through that key resistance of 42. Thing kept running. The next basically 20 minutes got to 43 and then started trying to run to 44. Couldn't get that high, though. Got up to like 43.86 and found a little bit of resistance up there. It's trading down 19 cents here this morning, maybe because Facebook's trading down. I'm not sure. Those two seem to move together, but 43.5 is where we are on Twitter. But it was a big breakout yesterday for Twitter. So are you getting a little more bullish on this stock here now, or are you still gonna say this thing is?
I mean, definitely this rally here caught me by surprise. 43.92 was the high, and then you go back not too many trading sessions ago. You had a high at 44 bucks. When was that 44 high? 43.95 high back on November 18th. 92 high yesterday's session. Big level. I would say if it gets to, I think this 44 resistance is going to hold here. It's not bullish. You get a break above 44, then you get all back up into that old, IPO open price at
Yeah.
45. So big run. What just hit the market, Brent? Did something come out here?
I got a little data for you guys. I got
Data.
the second reading for Q3 GDP that's coming in at 3.6%, a little better than expected. Economists were looking for a 3.1% gain. Also just out was initial jobless claims for the week ended November 30th. 298,000, a lot better than expected. Economists are looking for 320,000 reading there, and continuing claims 2.744 million, also just out.
Yeah, it hit the market. Actually knocked about 4 points off there. So surprise, surprise. Usually, those the only thing that moves the market is the jobs number. But that data today did move the market here, and a couple of your financials just they hit some bids there. But we're popping right back up here. We're flat now.
You know what though, Dennis? No Kroger earnings yet. I'm
Still waiting on
Yeah,
Kroger. It's getting bid up here. I'm still sitting here waiting to actually. Yeah, I'm short this stock actually going in. Just a light position.
I wonder.
There,
I wonder what.
I wish I wasn't short. Actually, I think they're going to beat. But
Okay. Yeah, we did get a little dip and a little rip. Got under 1790 here. Didn't make a new low in from the pre-market. That 1788 and a quarter. That also is a level. I mean, if you're looking for support, Dennis, that is the pre-market low, 1788 and a quarter. Minor support if in fact we do take out. I just don't see anything major in the 1780 handle, but I don't know. Just don't think they're going to kill it here ahead of the number.
yeah, well, we're sitting down here. We made the low 88 and a quarter, so that's where we want to hold. Obviously, here. I'm surprised though the volatility there. That was kind of impressive actually. The 4 or 5 point sell off. Looking here, a couple other ones. Solar City in the news, and they are unveiling smart energy storage system using Tesla battery technology. So we're getting pretty technical here, and I'm not a big technical solar analyst. I can tell you about the stock charts here, and I can tell you Solar City had consolidated here for a couple of days, but all of a sudden here, starting to look like it's breaking out.
Actually, I am a solar technician.
Are you?
Yeah,
Oh,
yeah.
I didn't know this about you. You do everything, Joel.
Well, Joe hooked me up with Ed Cahill, I believe, of Lux Research, and he put out a very bullish piece on the solar stocks. I think we're going to try and get him on as a guest in the show.
We've
So
got Ed Cahill coming on, and we've got Gordon Johnson from Axiom Capital coming on tomorrow, who's the solar analyst over
Ooh.
Ooh, and so I had to do a little bit of research here, and what I saw with, and it's funny that you mentioned this smart energy storage system because I found some of the critics of solar energy is storing the energy and saving it. I mean, it cranks it out during the summer, right? But you need it during the winter. So what, you got to store it. And so that seems to be a big problem. The production and the demand, needs to be equal. And the big thing is, what are you going to do with this energy when it's cranking out in the summer? You don't necessarily need it. So perhaps Solar City is unveiling a smart energy storage system, and this will kill one of the elements of that's plaguing these stocks. But they've been making a major run here. I'd like to get into them. I'm scared because of the
Yeah.
valuations on them and everything. But looking at the charts, I mean, these things are really volatile. I guess it's just kind of things where you just got to close your eyes and buy them. Let's take a look. It's trading up a $1.53 in the pre-market. Did make a pre-market high at $55, so they got really, really carried away on that good news. That $55 level coincides with the high that you had. Boy, you don't even have anything up there. There's nothing up there above that pre-market high of 55. Coming back on the downside, 51.38 was yesterday's low, a ways away from that. So really, no good numbers for Solar City.
Check out the first solar chart, though. This one's interesting. We put in one, two, three bottoms all in the same area around $59, and we kind of rallied yesterday. So we kind of took off. We got as high as 61.85 before closing at 60.80. Getting a little lift here this morning. We just ticked up a little bit to 61.16 here. So you think this first solar could be gearing up for another move?
This chart does look a little easier to decipher than the than the other one. Multiple lows at the $59 area. I like this one better because if at least I have a stop out point here below.
Yeah.
Yeah, below 59. Yesterday's high 61.85. Haven't got quite there yet in the pre-market. You did get a spike after hours in the issue up to. Now it's really trading at the high. So take a look to find resistance in this thing. 61.40 was your high. We took that out yesterday. I used 61.85. Above that 61.85, $62 level, things really open up.
House of Mouse with some news. They are increasing their annual dividend from 75 cents to 86 cents. So a big 11 cents for you shareholders there. And the stock's actually liking it here this morning. We are trading up 70 cents, which is more than I think this should be worth, because it doesn't seem like it's that big of an increase, and they never paid a huge dividend to begin with. But regardless, the shareholders like it. Stock's trading up at 70.72 right now. Very, very light volume, though. It did trade 14,000 shares on a cross at 69.97, but really it's only traded 2, 3, 5, 700 shares here this morning. So this rally here, very light volume.
Yeah, a little bit overdone. Multiple highs here at 71.25 to 31. Three highs in a row right there ahead of that 71.69, which is probably the all-time high. Up a lot on little volume, so a little skeptical of buying this one off the open. I'd rather see it, come back a little bit more into yesterday's range. 70.48 with the high, so theoretically that's going to be minor support. I'd really like to see it get back down to the $70 level. Two closes, 69.90 and 69.97. So that's 70. If it does go into soft mode at all, 70 should be good support.
8:30 imbalances just came out here. For you people that actually don't know about imbalances, we're going to talk about that in our 12 o'clock webinar on information arbitrage. But just briefly, at 8:30, an hour before the open, they come out with these morning imbalances where they show whether there's basically more buyers and sellers or more sellers and buyers, to keep it simple. I'm looking at across the board. There's a lot of negative imbalances here this morning. I'm seeing 127,000 shares negative imbalance in Pfizer. I'm also seeing 118,000 sell imbalance here in DuPont, which is symbol DD. So, and a few other ones across the board, but they are a little bit decidedly negative here. I'm not seeing too many buy imbalances on at least the S&P stocks here. ExxonMobil with the 42,000, but it's got a downgrade, so that one makes sense. Now, these numbers do change. They update continuously, and we still got 50 minutes, so as more orders come in, they might offset those imbalances. They can flip and go the other way. They can do all kinds of funny stuff, but at 8:30, sometimes, this is the first indication of, whether, there's more sellers and buyers here right off the bat. And in the case of Pfizer, actually, it's looking like that's pretty sizable, 127,000 shares to sell on Pfizer. And it's actually trading down 12 cents here in the pre-market.
PFE, the chart, the symbol for Pfizer here. That's how big did you say the imbalance was?
It's 127,000, which actually is pretty significant. Usually that'll knock it down 20 or 30 cents, but like I said, we're very early here, so it might get offset. And I do see some pretty big size in the book down at 35,000 shares down there, so I don't think it's going to go down that far. But, obviously they're pricing it in. That's probably why you just saw it go from 31.24 down to 31.15 because that sell imbalance came out. So some people gambling that maybe it does open down around 31.10, 31.05.
Yeah, this issue's had a series of lower highs since making that 32.50 high. You've had 6 lower highs in a row. So perhaps see that string broken today. You need to get above 31.43. Good support at the $31 level.
Look at DuPont here too, because this one's big. 118,000 shares is big for DuPont. I'm not sure, obviously, if this is going to, change by the time we get to the 9:30 open. But as of right now, 118,000 shares would knock DuPont down probably 50, 60 cents. It hasn't traded here this morning. It's 60.26. Best bids down at 60.01. Yesterday's low, 59.88. DuPont's had a bad 3 days. After topping out multiple times above 62, it just finally gave up 3 days ago, sold off a bit, then had a really bad day 2 days ago and it lost over $1, and then followed through a little bit more again. It looks like it could actually open down here again this morning.
Major support, 59.71.76.
Yep.
So
Yep.
that's you coming into 59.88 low yesterday. Call that whole 59.75 area major support. If in fact we take that out, we could be trading in the lower 59s.
Yeah, so maybe that's where it opens, and maybe they try to defend that area off the hop, but it all depends on what these imbalances do. Really here, just a couple other ones I just want to focus on here. Briefly, let's talk about a couple of the leaders. Tesla, I know, I'm sorry to bring it up there, Joel, with the whole trade and everything, but it did put in almost a double top yesterday. 144.94 was the high from 2 days ago, and then yesterday on $140 stock, I'll call that a double top. 144.43 was the high, and we did peel back after that. So Tesla did not make a new high yesterday, and actually pulled back $6 after failing to make that new high.
Correct. We did talk about that in the pre-market. That it got an erroneous print of 146. I was looking at that 144.94 number. Somebody else was looking at it. It's probably the same person that was selling back on November 12th. He had a high at 144.70. Also another high at 145.42 the day before. Boom, boom. Another 45.65 high. So that 144 and 145 area, huge resistance. But I have a new game plan, Dennis. Guess
What's your game
what do
plan?
you think my game plan is now for Tesla? Come on, you know me so well. You know me so long. What is my game plan here to get back into Tesla long?
You want to get back into it long?
Yep.
Or you're staying bullish Tesla. So I would say if it pulls back to that whole 130 area it was before, you're probably looking to pick bottoms, no?
Exactly. And
Exactly.
no, it is. You did miss my favorite trick of the 50% retracement.
Oh, and what is the 50% retracement?
130.52.
And you're taking from the 116 low that we made, the 116.10, and the 144.94 high, and that's how you're coming up with the 130. What did you say it was? 130. I already
Yep,
forget.
130.
A goldfish memory.
Yep, 130.52. You also had an old high at 130.59. The gap and go on Tuesday, the 131.59 low. So I'd love to see this thing just drift back down here to the lower 130s, and I'm going to reload.
We're going to take a short break here, and we're going to get Dave Moenning coming back on our show just in a few minutes here. So we'll get Dave, and we'll be back with you guys in a few minutes. I might just cover some.
Okay, we're just back with breaking Kroger news because Dennis has a position in it here. He got bid up in the after hours.
I was just gonna lift the 23s and just went 41.
What happened?
I was going to lift some at 23, actually, when 41.23 offer. It looks okay. The Kroger, I've been waiting for the earnings report. I got short them. I did not want to be short them, but I couldn't get covered last night after hours. So I took it through the report. I was taking the heat, and I was like, I'll take it through, whatever.
Why did you have a bid out there at 41, Dennis? There was a double.
You can't bid something. Oh, come on, Joel. You never bid something. You don't want to show support in a stock at just reported earnings. I don't want to show anything. First of all, I would never bid ahead of the earnings report because I could get picked off. The second reason I don't bid there is because I'm short that thing. I don't want to show any strength at all.
Okay.
So it's all about like lifting offers or putting a hidden order out there is a different story. But I definitely don't want to be just sitting out there and supporting the stock that I obviously want to go down because I'm short it. So
okay. So then offer 50,000 at 41.50.
That's illegal. That's called going to jail, Joel. That's called layering. So we definitely
No, what if you want to sell there? Then you put a bid.
If you really wanted to sell there, if you really had 50,000 shares to go and you really want to be short 50,000, that's fine. But if you're trying to cover on the bid and you're throwing out a fake order up there higher, that's called layering, son, and that's called handcuffs.
Okay, all right. So
what they did 20 years ago in the pits and stuff is much different than what they allow now.
Okay, all right. Well, all right, maybe not. Maybe 5,000.
Maybe 5,000. Yeah.
Anyways, we got Dave Moenning on from State of the Markets, a product on MarketFi. Dave, how you doing today?
I'm doing great. How are you guys?
Good, good. Sorry about a little Kroger discussion.
Well, you gotta work on that. That looks like an interesting trade right now.
Okay, so you do a piece, a monthly piece, the cycles for the month, and you just came out with the cycles for December. So what are the cycles for December telling us?
Yeah, the cycles for December. I mean, everybody on the planet, what's that saying? Something that everybody knows isn't worth knowing. But at this stage, lots and lots of people follow market cycles, sentiment, etc. But right now, the cycle, what we do is we look at a combination, or we create a cycle composite. And it's a combination of the 1-year seasonal cycle, the 4-year presidential cycle, and then the 10-year decennial cycle, which gives us, a composite to look at. And that goes back to 1927. Then you plot it out on a chart and see how things are going. What's cool here is it's kind of amazing when the market gets in sync with these cycle composite. It tends to stay eerily with it for quite some time, and obviously it will get out of whack on occasion and go its own way, like it did in October and November. But for the vast majority of the time, it tends to be pretty spot on. So it's something, while I do absolutely not believe in predicting markets, I don't have a crystal ball. I'm a systems and rules guy. Believe that the most important thing is to stay on the right side of the major trends in the market, and we just don't make predictions. However, these cycle composites are so good that they are inputs in both my daily market environment model as well as my my weekly market environment model. So long story for that. Sorry about the intro. But basically what December looks like, people probably have it a little wrong. Right now you're looking at what should be, according to the cycle, a little rally into the first week and a half into December, then a fairly substantial pullback. And then finally, your traditional year-end rally takes hold around Christmas time, and you finish at the high of the month for the overall cycle composite. However, the 1-year, the 4-year, and the 10-year are not agreeing right now, and so basically, we have to understand that the market, just because it's December, doesn't mean you're going to go straight up. You're probably going to get a pullback, probably going to get some sort of correction like we're having right now, and the timing of it, whether it's a week off or so, isn't really that critical. But, it's that time of year. You've got positive seasonality on your side. But I would warn people, I'm a macro guy, big picture. I would warn people that coming into 2014, that all the cycles project, especially the 4-year presidential cycle, projects a pretty substantial pullback in the March-April period. So you may be looking at a sell in May and go away opportunity again next spring.
Do you think too many people are like leaning? Because everybody I talk to and everybody I see on CNBC that pops in right now is saying exactly, they're saying the seasonality. They're saying, well, there's nothing going to derail this market. I mean, we were saying it even on the show here this morning. Do you think the short-term guy is now maybe too? Everybody's just saying, well, nothing's pulling this market back. I'm buying every time we pull back 1%. Do you think they're leaning too bullish here coming into the end of the year, and maybe this will be surprised here and actually get a sell-off at the end of the year?
Yeah, I do. I think again, I'm not predicting what's going to happen, but it would not
Yeah.
surprise me at all because first of all, the cycles have gone opposite since the middle of October. Market's gone up, and the cycle said we should have gone down. Also, again, something everybody knows ain't worth knowing, and
That's true.
everybody is looking for this advance. Just look at any of the sentiment numbers. The investors' intelligence numbers came out this week. Biggest spread between bulls and bears of the year. My long-term sentiment signal is screaming to pay attention here. So what that tells you is it isn't about people being right and wrong. It tells you about what people have done with their money. And by the time everyone comes on the show and says, "Oh, I'm bullish, I'm bullish, I'm bullish," what does that mean? Well, it means they've already bought.
Yeah.
So I think you're right. I think there is a way too much optimism right here. So a little shakeout to fake people out, especially when everybody's looking for the same thing, you got to raise your eyebrow a bit there.
Okay.
Joel, maybe you should go get those puts on the spies again.
I'll pick my point. So we talk with guests when they come on, and everyone kind of has their own ways for their trading preparation. I like to look at charts at night, do my levels, and be prepared, have a game plan. I've tried to be a systematic trader, but haven't been able to find that holy grail yet. What kind of preparations do you do for your trading day?
First of all, keep looking for the Holy Grail, and if you find it, let me know. I've been looking for it for like 28 years. So everybody I know has been looking for it. So I basically gave up. But I think most people who are traders, especially if they're new traders, they need to understand that they think of trading as a sexy business and it's so cool. We're going to make all this money and we're going to high five and all this good stuff. I think you guys agree it's really a lot of grunt work. I mean, you grind out the returns in this business, and that's really what it's about. So, my preparation is I come in every day at 5:00 at my desk. I review the overnight news. I review the overnight markets and the data. I get about 40 emails a night overnight, so I got to review all that. You then look at the futures action, and what I want to do is I want to make sure nothing happened in Europe and China, and then any other major news. Mm-hmm. Like this morning, we got the Challenger numbers, which were nothing happened there. Had jobless claims, which first time under 300,000 ages. That's big deal. And then that GDP print was surprisingly strong. So, we may be back in taper tantrum mode today. But most importantly, then, I look at my model readings. Everything I do is driven by the model. What is the market environment? What are the odds? What does that tell me? Is it bullish? Is it bearish? Is it neutral? And right now, my market environment model has been neutral for quite some time. And what that tells you is the current environment doesn't favor either team. So what I like to do in that situation is to let price be my guide. So like you just said, I want to review my price levels when we're in this price-oriented mode. And right now, I mean, it's pretty obvious. Anybody with a computer can see it. But 1780 and then 1780 and then 1813 are the current really important levels. And then if you break 1780, pretty sure you're going to 1745-ish in a big hurry.
Did you read my blog earlier?
Come
on, Dave.
Joel, he's looking at your blog. He's reading. He's a fan.
Oh my God! Now I know I'm right. Oh my gosh!
I know I'm right. Dave Moenning's on.
Dave just confirmed.
Puts, Joel.
Those numbers, those exact numbers I had in there, Dennis. I had those exact numbers in there based on the futures. Just a quick follow-up. You said 5:00 now. What do you want, Mountain Time? Or?
Yes. So that's it's pretty lame Eastern time, 7:00. But
okay. No, I just want to.
It's still dark. It's still dark when I get here. I think the most important thing that I try and do every day is to understand the market drivers. And to understand, I've got a 1-minute chart up all day, as probably everybody else does. But I want to know why. The market yesterday was insane. You look at a 2-point change and you say, oh, nothing happened. Well, we had a 9-point drop. We had a 14-point up. We had 21 points down. So what's driving that action? And if you can understand what's driving that action on a daily basis, then you're not likely to get fooled. And that makes your trade setups for individual stocks or your Momo stuff a lot easier. So, and right now, obviously, well, not obviously, but to me, it's obvious that the taper tantrum issue is really all the rage right now. But it's really not clear whether good news is bad at this point, because look, based on yesterday, that was pretty much the case. But now this morning, we've got this great GDP print, surprisingly strong, and the futures aren't moving down all that much. But I guess you've got the Atlanta Fed Lockhart come out and said his usual stuff, that they'll be looking at tapering in the next couple meetings, which I think the big fear here is the Fed would taper in December. I think that's silly, but January might be on the table. You never know.
Yeah,
So.
see, I don't need a 1 minute chart. I have Jake and Brent on the wire.
There you go.
So every time like the market moves like 3 points, I'm like, Brent, what's the news? What's the news? And he's like looking at
Gotta
me
get
like,
that Benzinga Pro going, guys.
yeah, that
That's it, the
Benzinga Pro, and I'm
Benzinga Pro.
they're looking
Yeah.
at me like, oh my
Can't
God,
figure it out.
the market barely moved, and I'm like, news. What's the news? It's gotta be
I'm
news.
always asking too, man. Like, what's the news on this? Like last night, we were even looking with the Morgan Stanley Citigroup downgrades at Deutsche Bank there, and those took the market by surprise there, because that did not
Yeah.
break on the major news wires at all. Like, Benzinga team, where's that? So,
They're great, man. They
They
scan.
hunt. They find it though. They find it, and obviously,
But isn't
Citi
that
and
really
Morgan
the
Stanley.
key? I mean, if you can understand what moved the market, then you can make a pretty good decision
Yeah,
as to whether it's
exactly.
important or not. And knowing why the market moves, 18 points in 16 minutes, hello, you got to pay attention to that.
Yeah, it's very important, because obviously, if it's just a technical thing, it's one thing. But when there's new fundamental news, and we're going to talk about, we've actually got this seminar coming up at noon on information arbitrage, and just
Excellent.
talking about how important information is. I mean, that is a trader's best friend, is information. It's all about obviously understanding, if the orders you're trading with and trading against are informed or uninformed. And obviously, the more information on your side, the better informed you are, and the better trading decisions you're going to make.
Right.
Yeah,
And then those key levels, you got to watch those, as
All that.
you guys pointed out.
Yeah, key example. Hate to go back and remind myself about the Tesla trade, but when I had those, I mean, technically, I knew what I was looking at and the formation and everything. But boo, when I'm driving into the office, I'm thinking, man, I hope there's some good Tesla news. I hope there's some good Tesla, because that's the driver. You had a lot of people short it. Lo and behold, the day after I covered my calls.
That's always.
They come in and it's trading green, and the news was an upgrade to the best idea ever. You have to own it at the market, I think, by Morgan Stanley. And the other thing was a German company, I believe, backed off on their investigation on the cards and stuff. So you're right. It's the news, it's the information. I'm glad to see you're at your desk early, seeing if the fundamental news. We could talk about charts all we want, but really, when that fundamental news comes out, you really got to pay attention.
Yeah, you
Yeah.
got the algos. Algos are going to react faster than we can react. The really funny thing is the algos oftentimes are confused and they don't get the news right. That's the really humorous part, is when they move on a headline and like, wait, you didn't read the rest of the headline. And so yeah,
Did you send Dave our presentation already here? Because he's giving it all away here.
I know, man.
I'm sorry,
Oh,
guys.
that's funny. That's funny. Though.
This ends our interview with Dave Moenning. No.
He's read our presentation. He's taking all our guns away. Actually, we're going to talk about how the news algos overshoot a lot of times and they get it wrong,
Yeah.
because a lot of times these programs, and everybody's running these. I mean, some people aren't probably as well informed as other people that are running some of these programs, and they're just reading a headline there, and a lot of times not going into the details. And if they read it as good, and it's actually, when you get into the the devil's in the details, and if it's not that good, sometimes you'll see the stock actually shoot the wrong way off the bat, or you'll see it overshoot, where you think something's really going to be a good report here, and it's actually not as good as you think, and they buy it too high. And there's always an opportunity for the opportunistic trader out there.
So the next example of that's probably going to be the jobs report on tomorrow. We get the algos will be looking for numbers in the print, and then we're going to have to read into that report and see whether it actually makes sense. So it's always funny to see the algos move the market, and then the humans get in there and actually read it and say, hey, oh, we better go the other way.
And that's the difference. A human being can think. The algorithm
Yes.
can do what it's programmed to do. So, and that's the biggest difference there is like we can rationalize, we can adjust quickly. That program, and they say, oh, we have thinking algorithms and all this now, but it's never going to work like a human brain. It's very good at responding to pure information and trading off of pure information. But when there's some interpretation issues in there, I think a human being is always going to be superior.
Yeah, and that takes me back to the concept of strategy. Again, we talked about this business being a grinded out business, and right now, I think it's important for everybody to understand you've got a neutral. Even though the indices are up, the overall environment is neutral. There's some divergences going on. The momentum hasn't been that great, so I think we've got to play the game. Even though it's December and everybody knows that the January effect is coming, blah blah blah, I think it's time to play the game a little more conservatively. And if we've had a great year this year, knock on wood, and I think it's time to maybe book some of those profits and play more conservatively.
Okay, and some of the issues that you're looking at. I mean, we've had a nice run in Apple here. Is Apple part of your portfolio, or are you trading it? I mean, had just a tremendous run since breaking out of 530. What's your approach here? This gap up day here in Apple.
We have owned Apple in our portfolios. Obviously we got out of it, last year. It's been it looks like it's returning to a trend-oriented situation. So yeah, I think obviously you don't want to be. I'm not a short-term trader like you guys probably are.
Yeah.
So different time frames, and that's a really important concept, is to understand your time frame. So I look at. I'll look at the Apple chart and say, okay, I missed it. If I'm not in it, you had that beautiful setup in the middle of November down at 520. Then you had a classic break. So you're just on a momentum run right now. So the weekly chart says, hey, you missed it. Look for the next resistance and buy the pullback.
And what kind of pullback would you be looking for in Apple? I mean, we've had, basically 40 points straight up here. You're looking at for a retracement, or are you a moving average kind of guy? What are you looking for?
Well, it's pretty simple technical analysis stuff. I mean, in today's world with all the computers and all the indicators, remember I've been doing this a very long time. We had to draw trend lines with a ruler back in the day.
Nice.
Your moving average involved a calculator and an eraser. So yeah, to answer your question, I don't think the moving averages are very helpful right now with Apple, especially if you're looking at 570 something this morning. So I would be looking to pull back, maybe back down to 5. If you have to be in the stock, if you can get anything below 560, go ahead and take a little position. I might leg in at 550, and I definitely want to then go back and look at the 540 area. And basically, my opinion would be if you break below 550, your move may be in jeopardy, and the short sellers may be coming at you. So, I think it's clearly a Momo move right now. So we got to be careful.
Yeah, it's funny that you mentioned using a ruler to draw on the lines. I can remember when I started doing technical analysis when I was down at
Did they have rulers back then?
Yeah, they did. They did at the Chicago Mercantile Exchange. Used to buy a chart book.
Sure.
And it would come out every Monday, and then every day after the close, you'd have to put the high and the low and the close in, and then and do your numbers off. That's funny that you mention it.
Yeah, remember those? I mean, that was exactly the way it worked. I used to get the William O'Neill book, which was like 2.5 feet tall, and you'd drag it home, and on a Friday night or Saturday, whatever, I just remember paging through, and it's no different today. We just do it with electronic pages. You go through chart by chart by chart, and like I said, it's grinded out every Monday. We review or my son is probably the key in this area because he does all the work, but he goes through 400 or 500 charts.
Yeah,
looking for our setups.
Okay, so you gave your call as far as your levels, and at the end the end of the year, perhaps a surprising sell off. Are you positioning yourself accordingly, or are you just kind of like the market's going to go up forever, guy, and I'm not gonna try and hedge on the downside at all?
No. We don't. We are not potted plants. We're fairly active in our approach, but I'm also a trend follower. So, the key is to get the big moves right. That's my battle cry. So when the market is making a big move, like it has done this year, we're long and strong and enjoying the ride. But right now, like I said, our market environment model is neutral. So even though we're very close to all-time highs, the environment model has been neutral. So we're in a cautionary environment right now. We're actually in our market timing programs, we're in cash, or our trading programs. For our stock portfolios, the insider portfolio, we've got about 50% cash, but that has more to do with the fact that we just can't find any stocks to buy right now. But that in and of itself says an awful lot about the market. So, so for our trading programs, we're in cash, but that could, move over 1810, bam, we're right back in and back on the train. So,
Okay, so you would look to buy this on strength and just let the market forward in May on the downside. So
yeah, I think given the remember we've got the year-end window dressing coming up, right? And the deal is that if the quarter is up, if the month is up, then usually the window dressing is going to go in the same direction. So I think it's even though everybody on the planet knows it, probably a safe bet that the window dressing is going to be to the upside. Remember, the average hedge fund got smoked again this year in terms of compared to the S&P, and I know that's not their game, but there may be some performance anxiety kicking in here, and if the market, and that's why I think 1780 is so important. People are going to be buying the freaking dip, right? So if 1780 holds, then the dip buyers are going to come back in a hurry, and I wouldn't be surprised if we pop higher. However, that 1780 is key. You break below 1780, get down to the 1775 area, that old support zone. If that breaks, that tells me that the hedge fund guys are trying to bring the market back to them and make their numbers not look quite as so bad.
What else I look at
go ahead.
too, and I don't know how much you look at the breadth, but there always seems to be, like on the pullback days, even like yesterday, there always seems to be sectors that are strong. Where money is simply not cycling for the most part out of stocks. It's cycling into different sectors. It might be cycling into some defensive names, but it's staying within equities. And I can remember, when we got real sell-offs back in the day, I'm looking across my board, and we're red across the board.
Right.
And that's when I really start to feel like when I start seeing it red across the board, I was like, oh, this might actually be real. And I have not seen that in the last few months, not any days at all.
Nope.
Even on our down days, I'm seeing certain stocks and certain sectors still red. So do you look at that too, Dave?
Yeah, we really do. I mean, that's the breadth and strength of the overall market, and that tells you a lot. I think we're starting to see some divergences, but on my screen every day, I always look at the banks and the semis.
Yeah.
Because if you're going to get one of these, it's time for a consolidation pullback type things. The bears will attack one of those two, and you can just see it on a 1-minute chart. The market's up, and suddenly, bam. The semis are hit because they're extended, or the banks are hit because they're extended, or some sort of news comes out. And so if you've got what I would call an artificial pullback or a run-of-the-garden variety type pullback, you'll probably see one of those two sectors be attacked, in my words, and then take it down, market goes down with it, and then bam, they'll turn it around and run it the other way. But that tells you that your pullback is a buying opportunity, not like we saw back a couple of years ago when everything was a disaster across the board.
Yeah.
And those numbers that you're giving on the S&P 500, are you looking at the cash index?
Yes,
Or are you talking
yes.
about the futures? Okay.
Cash.
Because
So it's 3 or 4 points.
to me,
difference.
cash is trash because
It's the same index, Joel.
It's the
Just 3 or
same
4
index.
points
No,
difference.
it's not.
You can look at either intraday. It's the thing is the cash obviously doesn't trade after hours.
It's
in
right.
pre-market.
That's
So-
right. The futures.
but if you're intraday and you're looking at the cash, that's fine. You just got to do the adjustment. There's a fair value calculation. I think we're like 3 points difference or something right now.
Yeah, we're a money. I apologize. I should have clarified that. We're a money. I'm a money manager, and our clients. We run money for mom and pop and some institutions, of course. But it's pretty basic stuff. We don't use futures. We don't use options. I'd love to be able to use options, but when you've got money at a trust company, they don't allow you to. So,
Correct.
So again, I apologize for the old school approach and using that cash.
Old school works. I mean, some of these, strategies. We had Jeff Goldman talking, and from that classic book, Reminiscences of a
Oh,
Stock.
absolutely.
And the theories that were taught, we even back that book's, 70 or 80 years old or something like that. But the basic principles still apply. It's still the same game. So, old school stuff still works in a new market. I'll say it. I'll go out on a limb and say that. So.
Thanks, Dennis. You're making me smile.
Okay, we've had Dave Moenning on of State of the Markets. He also has his latest piece on MarketFi, Benzinga.com. You should go there and check that out.
I actually just put the link in the chat.
Okay, thank you, Jojo. And Dave, thanks for coming on. I love your insight in the markets, and
Thanks for having me. It's been
yeah,
fun.
yeah, we'll see what.
Thanks, Dave.
Yep, say hello to your son too, and we'll get him on very quickly. But we're gonna move on now to Mighty Joe Young with some headlines. Thanks
Well,
again, Dave.
Thank you.
And moving into today's headlines around the globe, the National Security Agency tracks the locations of nearly 5 billion cell phones every day overseas, including those belonging to Americans abroad, the Washington Post reported on Wednesday. The NSA inadvertently gathers the location of records of tens of millions of Americans who travel abroad annually, along with billions of other records it collects by tapping into worldwide mobile network cables, the newspaper said in a report on its website. Such data means the NSA can track the movements of almost any cell phone around the world and map the relationships of the cell phone user. The Post said a powerful analytic computer program called the Co-Traveler crunches the data of billions of unsuspecting people, building patterns of relationships between them by where their phones go. That can reveal a previously unknown terrorist suspect in guilt by cell phone location association, for instance. Hackers have stolen usernames and passwords for nearly 2 million accounts at Facebook, Google, Twitter, Yahoo, and others, according to a report released this week. The massive data breach was a result of keylogging software maliciously installed on an untold number of computers around the world, researchers at cybersecurity firm TrustWave said. The virus was capturing login credentials for key websites over the past month and sending those usernames and passwords to a server controlled by the hackers. On November 24th, TrustWave researchers tracked that server located in the Netherlands. They discovered compromised credentials for more than 93,000 websites. We don't have evidence they logged into these accounts, but they probably did, said John Miller, a security research manager at TrustWave. Bloomberg reports that Microsoft will expand the use of encryption to protect customer information, following reports that governments are intercepting data traveling between users and servers or between company data centers. The company will also step up its legal efforts to protect private data and will make its software code more transparent so customers can reassure themselves Microsoft's products don't contain backdoors allowing access to their information, the software company said in a post on its official blog Wednesday night. The encryption enhancements will be completed by the end of the year, the company said. Yahoo and Facebook have said they will also boost encryption. Lots of data security today, huh? Yeah, wow. So yeah, if any of you have passwords like password or admin or 1234, you should probably change it to something a little bit more unique. 3 of the biggest U.S. lenders failed this year to meet some requirements for giving relief to struggling homeowners in a $25 billion settlement over foreclosure abuses, according to an official. The monitor overseeing the settlement said in a report issued Wednesday that Bank of America, J.P. Morgan Chase, and Citigroup together failed to meet 7 of the 29 requirements tested in the first half of the year. The failures include requirements to notify borrowers of any missing documents in mortgage modification applications within 5 days of receipt and to give the borrowers accurate information before foreclosure is started. Monitor Joseph Smith said the banks had taken steps to correct the errors. The former head of Android is now working on a new robotics effort for Google. Andy Rubin, who co-founded and then led the Android mobile platform up until this year, is turning his passion for robots into a new moonshot venture for the California tech company, the New York Times reported yesterday. Though few details have been revealed by Rubin or Google, the robotics effort is targeted at manufacturers and aims to improve the way Google and other companies assemble and deliver products. General Motors, it's pulling its Chevy brand out of Europe, reversing a decade-old marketing strategy as a revival at the car makers Opel and I can never get this one. Is it Vauxhall? I think that's a very American way of saying it, though. It's like calling it a Peugeot when it's Peugeot. Opel and Vauxhall SIC divisions beats the U.S. nameplate's performance in the region. Chevrolet will halt deliveries in Europe by the end of 2015 while remaining in Russia, GM Vice Chairman Steve Gursky said on a conference call Thursday with reporters. Reorganization costs from the shift will total $700 million to $1 billion. The move ends an effort by Detroit-based GM to use Chevy, one of America's top-selling auto producers since it was introduced in 1911 to make up for losses in Europe generated by Opel and Vauxhall. A Washington state woman known for monitoring police scanners unknowingly live tweeted about a fatal car wreck on Wednesday, unaware that at first that the victim was her husband. Oh, yep, special guest Darth Vader on the show right now.
Darth, say hello.
Say hello, Darth.
Hello.
Close enough. Karen Johnson, known in Portland area social media circles by her @ScanCouver Twitter handle, very funny, that's good, ScanCouver, posted, "OMG, that is so horrible," after learning of a two-vehicle collision on I-205 in Vancouver, Coin.com reported. Her husband was killed after the car he was driving crossed from the northbound lanes into southbound I-205 and struck a pickup truck, authorities told the station. He was pronounced dead at the scene. Trooper Will Finn told Coin.com that this for me took it up to the next level. I feel like I somewhat already have a relationship with this person. Finn, who is responsible for Washington State Patrol's official Twitter feed, said he knows Karen Johnson through social media and saw that she was trying to call her husband after the accident. "I'm not trying to panic, but my husband left work early and he drives 205 to get home. He's not answering his phone," Johnson posted Wednesday afternoon. Minutes later, her Twitter postings became increasingly frantic. After contacting authorities, Johnson reported that the victim was her husband, tweeting simply, "It's him. He died." Thanks for that, Chubbs. It's depressing. Ron Burgundy's scheduled Thursday 6 p.m. appearance on SportsCenter has been canceled in light of the potential implications of any news from Florida State quarterback Jamie Winston's sexual assault investigation. The prosecutor investigating Winston will hold a news conference today at 2 p.m. to announce his findings. Will Ferrell's character has been making numerous media appearances leading up to the release of Anchorman 2. Let's do a live poll in the chat right now of who would rather see Ron Burgundy on SportsCenter instead of Florida State quarterback sexual assault investigations. Huh?
I'm all for the Ron Burgundy on SportsCenter.
All in favor of Ron Burgundy, say aye.
Aye.
Thank you.
And Darth Vader says aye too.
Yep, well, thanks, Darth, for stopping by. We really appreciate that. And today's trivia tidbit, Chubbs, you used it. Oh, man. Sotheby's has predicted a handwritten working lyric sheet for Bruce Springsteen's 1975 hit Born to Run could sell for as much as $100,000 today. The document used to be in collection of Springsteen's former manager, Mike Appel, said Sotheby's, which did not reveal the identity of the seller. Most of the lines in his 1974 version, written in Long Branch, New Jersey, are apparently unpublished and unrecorded, but the manuscript does include a nearly perfected chorus, the auction house said. Springsteen is known to scrawl his songwriting stream of consciousness in notebooks. However, his thought process, written in blue ink on an 8.5 by 11 sheet of ruled note paper, could trigger a spell checker meltdown. My associate editor here on the news desk and I have an ongoing battle about Bruce Springsteen. I'm not a fan. He's a fan. I'm a bigger fan of people that are better, and I'm sure that this is going to start my own war against Bruce Springsteen. I think he's boring, and so Shubs tries to squeeze in Springsteen trivia whenever he can. So with that, this show would not be possible without our dear friends over at OptionsHouse. That's right, OptionsHouse, who will give you 150 commission-free trades if you sign up for an account just by clicking on one of the links on this page that says get 150 commission-free trades when you open an account. All because you listen to Benzinga's pre-market info. So just click on one of those ads, sign up for an account, 150 commission-free trades, in like Flint. And with that, we're going to hand it over to Jake with the morning movers before the bell.
Thanks a lot, Joe. I'll get you guys started with some of the movers this morning. One I want to get right out of the gate is Mattress Firm. That's Mike Foxtrot Romeo Mike. Company did report earnings after the close yesterday. It was a pretty strong report. Shares are up over 14% in the pre-market this morning on almost 250,000 shares. So we got a lot of strength there. We're also seeing strength in Select Comfort, another mattress maker. That's Sandy, Charlie, Sandy. That whole sector tends to move very closely together, so keep an eye on them today. Joel, what do you think of some of these mattress companies? I mean, they tend to trade very closely together, and Mattress Firm knocked it out of the park. There was a report back in September where some analysts were getting really bullish on it, and the sector's been doing pretty well, except right in early September they dipped pretty heavily and have been rallying since at least Mattress Firm has been since late October. Nice strong rally there, almost to what's that high? They had about $36. What do you think on Mattress Firm?
Getting a nice pop in the pre-market, finding a little bit of resistance here at the $39 level. Made a high in the pre-market at $39.17, so we'll be keeping an eye on that one. If we need to go to the dailies here to find some other resistance in this issue, MFRN, you gave me the symbols on that. Let's take a look at on the daily chart here. Well, look at that. You had a spike back in November up to this $39 level as well. That high was up at $39.54. Only got to $39.17 in the pre-market, but that was a spike. I think you'll see some sellers up there in the 39 handle.
Should be interesting to see if we get a battle at that $40 level. Again, keep an eye on all those mattress companies at the open. Another one I want to point attention towards is Magic Investment Corp. That's Mike Tango Golf. Company got added to Goldman Sachs conviction buy list this morning. That's an initiation straight to the conviction buy list, so Goldman Sachs can't get more bullish on that. Gave it a $10 price target, which was over a 23% premium to yesterday's close price. So Magic Investment's been kind of all over the place. Nice strong rally though since late June. It's been trending upwards. Joel, what do you think on this one? I mean, we saw a low of below $6 back in June. Now we're looks like we might be heading towards the $9 level. Things getting interesting here.
850 pre-market high. Looking at the daily charts, I had been running into a lot of resistance at 820. A couple highs right in that area, 820, 824. So I think you could be a little bit patient on this one. I don't think you need to go up and pay 850 on it. Perhaps wait to come back into those former highs at 820 will act as support. Coming up on the upside too, you are also opening into a little bit of resistance. 845 was your high on November 5th.
Another one we're taking a look at this morning is Solar City at Sandy Charlie Tango Yankee. Company announced a new system to store energy for businesses. The idea is to allow them to use solar panels, and then they'd store the energy in these batteries, and then when there's high use periods that often cause brown or blackouts in the area, they could turn on these batteries. Now what's interesting is this battery technology is actually Tesla battery technology, so once again we're seeing two of Elon Musk's public companies working together here. Solar City is really rallying on the news this morning, up almost 4.5% on the news. Now the company does have a short float of over 21%, so this is always prone to short squeezes. It's also an Elon Musk stock, so if Tesla's rising, often Solar City rises as well. So when you put an Elon Musk premium, a high short float, and a solar name together, you're going to get a pretty volatile name, although it is kind of trending upwards recently. Joel, what do you think of Solar City?
Got to pop up to 55.40 initially off the news, so we'll keep an eye on that as a parameter. Since hitting that 55.40 level, you did get a peel back to $54 level. Still like to see it hold 54. If not, I'd be a little bit cautious on the long side. Looking at the resistance, did have a high back going back a few sessions ago with 56.73. That just seems a little bit far for it to go on this news. So just be keeping an eye on the pre-market high 55.40.
Another one we're taking a look at the same time is Tesla, since those are Tesla batteries being used. Company got that 15% rally on Tuesday, pulled back a little bit yesterday, but sitting right below. It closed right below the $140 level at $138.95. This morning, Tesla's getting a little bit of a rally on news that its technology is being used by Solar City, specifically its batteries, possibly seen as a new revenue outlet for the company's technology. Shares are up as much as 1.5% this morning. I'm seeing them up about 1.3% right now, sitting above that $140 level though. So kind of a psychological level. Joel, I mean, I feel like we have to take a look at Tesla every day since it's so all over the place. Always nuts as far as the trading goes on this one, but so many people love to trade Tesla. I feel like we can't not take a look at it.
Be remiss in not covering Tesla, and plus just rub a little salt in the wound, but that's okay, guys. We got to cover it. 44.43 to 44.94. Those were your highs from Tuesday and Wednesday. Double top there. We also didn't mention previous resistance at the exact same area back in November, early November. So that's the area on the upside. Get clear 145 here. You got another leg up, perhaps to the 160 level. If not, I sure would like to see this thing drift back down into the lower 130s, 50% retracement of the move, get it back there, maybe fill the gap down to 128.55. But boy, it's getting to pop up now. It doesn't seem like it's going to be going back down to 130 anytime soon.
Another one I want to take a look at is Aeropostale, the teen retailer. That's Alpha Romeo Oscar. Company lost more than expected on the bottom line after the close yesterday. Also missed on the top line as far as revenue goes. The EPS was down over 200% year over year. If you're looking at, or actually just shy of 2%, or 200%.
200%. Wow, that would really be bad.
Yeah, it is bad. Shares are down 6%. In the pre-market today. All these teen retailers have been just getting absolutely hammered the last couple of months. We're seeing weakness in the sector as a whole. American Eagle Outfitters was red. It looks like it's turned into the green though today. American Eagle's Alpha, Echo, Oscar, it's up about 0.3%, and Abercrombie & Fitch has not yet reacted. So this group tends to trade together. Joel, what do you think of Aeropostale? I mean, the earnings were real bad. All these teen retailers have gone from profitable just over a year or 2 years ago to almost all of them into losses now. I mean, it's just it's been a brutal year for them.
I can understand these teen retailers about as well as I could understand teenage girls. I mean, it's tough. I mean, it's fickle market. I walk by these stores in the mall and I'm just like, who would buy this stuff? So that obviously being reflected here in the share price. From a technical perspective here, $9 has been resistance. You did get a big dip off those terrible numbers in the after hours, or was it? It was in the pre-market here. It got down to 8.24, then you pop right back up to the $9 level. Nine's going to be a battleground there. If in fact it can get over 9, it might have a chance to fill the gap at 9.25. Coming back on the downside, that 8.24 low coincides with the low that you had. Well, a little bit lower than that, 8.07, but whopping bad numbers for the issue.
Another interesting one to take a look at this morning is Carnival Corporation. That's Charlie Lima. The company has a weird trend of literally just trading down every morning in the pre-market and then usually going flat or slightly green or slightly red at the open. I don't know if you ever see anything in this one, Joel, but it's weird. I don't know if it's an institution that likes to bid it down in the morning. There's no real news on this one. It's down 1.5%. It's almost every morning that it's down roughly 1% in the pre-market, and then usually recovers at the open, and then the real action, whatever's going on with it, starts during the day. Do you see anything on Carnival?
I see. They haven't had any bad news lately, so that's good.
No ships have sank, so they got that going for them.
Or none have mysteriously left the dock either, so that that's a good thing. $35 is huge in this. 35.16 was the low yesterday. You've had a couple other lows at the $35 area. You are getting it down in the pre-market. Maybe someone has a little bit of an algo or something. They really knocked this thing down. Around 6 a.m. they knocked it down to 34.55, and those aren't little prints. 5,000, 10,000. I mean, someone is selling a piece here. Now you've gravitated back up to the $35 level. If in fact it can hold 35, I think you got a little bit of a chance at a rally. 35.16 fills the gap, but interesting to see no news. That's a pretty big drop for Carnival.
It's battling at that $35 level too. I'm seeing it tick between $34.98 and $35, as it looks like the Bulls and Bears are kind of battling it out there. So definitely an interesting one to watch. Another one I want to take a look at is Dollar General. That's Delta Golf. It's the discount retailer. Company's shares are up almost over 3.5% this morning after the company posted a large third quarter profit after the close yesterday. Third quarter EPS came in at 72 cents versus a 70-cent estimate, while revenues missed on the top line, 4.38 billion versus expected 4.43 billion. Joel, you want to knock this one out real quick before we roll into the open?
Gap up here. Let's see what we did in the pre-market. Pre-market high, we got up to 58.60. We're quickly approaching that level, so keep an eye on the pre-market high, 58.60 for Dollar General. If in fact it can take out that level, have a couple tops to deal with the $59 level. 58.78 and 59. 59 is the number on the upside. That was the high on the 26th. So, Jake, thanks for the movers there. You can stay on here, and if any other issues of interest pop up, please let me know. Just going to do our daily Sun Tech Energy for JH3 here. SUNE. I had a running start in the pre-market. Got to 1383 yesterday. It did had a pretty big range, JH3. So opened up at 1364. We haven't had really a major uptick there. I think your resistance is gonna thicken up between 64 and 83. S&Ps go down off that number that we had at 830. 86 and a quarter was the pre-market low. We've only got to 87 here. Dennis and I were talking about perhaps maybe a little position squaring here ahead of the unemployment number. No great numbers to lean on here in the 1780s, so we'll see if we can hold above that pre-market low, 1786 and a quarter. Looks like they really overshot things here on the Apple China mobile news. Traded up to 576 in the pre-market. Interesting here. It's going to come down here. It can fill the gap. You had a high on Wednesday at 569.19, which coincided with your December 5th of 2012 high. So that 569 critical support here for Apple. Now trading at 570 even low. So 569, fill the gap. Below that, things open up down to the close at 565. ExxonMobil did get a downgrade. I can't remember who it was from, but Raymond James, thank you, trusty Brent. That did go down and hit yesterday's low to the tick, 93.92. So support just under the $94 level in shares of ExxonMobil. Microsoft making a run at 39 today, trading at levels we haven't seen in about 13 years here. Just to keep an eye on the resistance point, because Microsoft is one of those stocks that will make a couple plugs in the number before it goes away. Closed right near the high of the day, 38.94 of the 98 high. Trading a little bit lower here in the session, so see if it can challenge that $39 level. S&P's getting a little pop here, trying to sneak back into the 1790 handle. Keep an eye. You had a double close at 91 and a quarter. 91 and a half, so another couple points. You might find some minor resistance in the S&P 500 futures. Solar City out with some good news this morning. Stock trading higher here. I believe we are above. We have not hit the pre-market high yet here. Let's take a look. I think that stock did trade over the $55 level during the pre-market. It did get to, I think, 55.40. I have to take a look at that on the chart here. But nice run for Solar City. Yeah, it did trade up to 55.40. Yeah, is the pre-market high. So we'll keep an eye on that for Solar City.
Joel DJ is asking about CVI. That is CVR Energy. CVI is a ticker, sorry.
CVI, yeah, he's been following Uncle Carl on this one.
Yeah,
right here.
good old Uncle Carl. I did see a Macquarie upgrade on CVR earlier. They did have an underperform rating though, so they brought it to neutral. So not exactly an extremely bullish upgrade by Macquarie this morning.
Took a little heat yesterday. DJ went down to 38.77. I hope it didn't shake you out on that one, but we are trading smartly up here. Only thing, little bit of troublesome here is you opened up at like a high, and is this, yeah, 40.44 that opened up and then came off that level real hard.
Oh wow.
Yeah, so we'll have to see. Is this thing trading? Is it halted or no? There it is. It's
Yeah, I
trading.
see
Kind
some
of
ticks
quiet
now.
here. So
Yeah.
like to see it sneak back up to that 40.44. Someone dumped a piece there on the open, so maybe do a quick 50% retracement on that from that 40.44 move down to 38.77. That would be your first resistance point. Neil's still needed to break above that $41 level. 41.21.29. So thanks for the news on that one, Brent. If there's any other issues of interest out there, traders, please let me know. I'll try and take a look at them. Facebook did not get put in the S&P 500. Anticipation there off the report from UBS. Stock did give a little bit back here. Did trade right at the pre-market lows here, which is right around 47.80, and getting a little pop off there. Major resistance up there at yesterday's high in Facebook. Believe that got all the way up to 48.77. That coincided with the 48.84 high on November 18th. So we'll see if Facebook can crawl back. S&P's right back in the 1790 handle. What do you know? A little dip, and now the rip north. You do have the two closes right here at 91.25, 91.5. That could be your first target on the upside for your longs. Other issues, Morgan Stanley downgraded today, trading down in the pre-market. Made a new low from the pre-market, but we are getting a little bit of a bounce here. We'll see if Morgan Stanley can sneak back into the 31 handle. Looking at yesterday's high, 31.29, a little ways away. Perhaps a better target on the upside, if in fact we can clear 31, would be the close from yesterday at 31.13. Dollar General ripping through all resistance points here on the good numbers. So kind of open and go in shares of Dollar General. Let's take a look at Twitter. Twitter had that nice day yesterday. Kind of a quiet session so far for Twitter. That $44 level. Yesterday it hit 43.92. You also had a high right in that area at 43.95. So major resistance, and now it's a stick away from here. It did open up at 43.59. Coming back on the downside. Already had a 70-cent move here, 42.83. Not a lot of support under that level. We'll see if that can hold up early in the session. Apple couldn't quite fill the gap down to Wednesday's high, and now you're getting a little bit of a bounce here up to the 572.90 was the high. Pre-market high for Apple is way up there. I believe it was 576 something. Let me go to the chart here to check. Yep, even higher than that. 577.38 was a high in the pre-market. So that could be objective for shares of Apple, which has just been on a tear here since breaking out from that $530 level.
Joe, how does it look like Dennis's Kroger trade went?
Let's
Take
go.
a look at that chart.
Let's go Krogering.
Let's go.
Oh, you know what? I'm gonna have to pull this up here. Kroger, for some reason, is not coming into the system here. 41, Dennis. Are you listening, Dennis? 41. 41. 40.87 is the low that it hit. Got below that. Opened at 41.55. Dipped below to 40.87. That's your low in the stock. You also had a couple lows around 41. So
Looks like it wants to hold over 41.
yeah, it does. It has to. If it doesn't, you got another. The 40 handle doesn't have a lot of support in it. You had a 40.72 low on October 11th, but looks like someone's targeting this $41 level as support. So hopefully that's where Dennis got out at. Citigroup downgraded two days in a row.
Goldman and then Deutsche Bank was late last night, so I mean it's actually affecting the stock today.
Yeah, they're not. It's not really going. They didn't even get to yesterday's low here in Citigroup, so kind of shrugging off the back-to-back downgrades. 51. They didn't even get near yesterday's low, which was 51.05. Got to 51.50. Kind of just migrating back up towards the close, 52.04. That's a resistance point here. Two closes, right? 52.04, 52.13. Still 50 cents away from there. So I think that'd be good resistance if you get a rally here in Citigroup. Taking a look, what else did we cover today?
We covered a lot of stuff.
Target.
We covered a lot of ratings.
What was it, Target? Did someone downgrade that? I can't remember.
I don't think so. I mean, you're getting a lot of the same-store sales figures today. It is the first Thursday of the month, so a lot of these retailers are issuing their monthly comparable figures. But I don't think Target is one of those that does it anymore.
Target, 63.54 is the high. We hit 63.58 in yesterday's session. Potential double top there, so keep an eye on that level. If you've suffered these moves down to the lower 62s over the last few days, at a resistance point for shares of Target. S&Ps sneak into the 1790 handle, only the 1790.50 couldn't quite get to the close here. So we'll see if that the morning low 86.25 and the intraday low 87 even are going to hold. Apple, if you're waiting to fill the gap down to 569.16. No luck as of now. Turned around on the dime here. Now up 10 points. Trading, making a high, new highs as we speak. Pre-market high was up there at 577.38. So another 10-point day for Apple here. Let's take a look at Google and
the GOOG monster.
The Googster. This one has been on my radar here as a potential put candidate. Just tight ranges in this issue. Besides the tight ranges, you're getting a series of lows here at the 1050 level. And looking at that 1050, you got a 1040, actually three lows in a row within 2 points. 1049.02 to 1050.76. You've hit 1051.12 in today's session. So tight ranges. Boom. I mean, I guess off the open would have been a better time to pull the trigger on this. But critical level, nice round number 2 here at 1050. So you bulls better hold out here for 1050 to hold in the Googster.
Joel Tiffany's got an upgrade this morning. I'm not sure. I don't believe we talked about that one. At Goldman, pretty big call there. Upgrade to buy. TIF is the ticker there. They raised the target to 105. Stock up about 1.5% right now. Right at $90. How's that chart looking?
Goldman Sachs is buying strength here and shares of Tiffany. Very expensive store. The only stuff my kids have from Tiffany is gifts they've got for like their bar mitzvahs and graduation and stuff. 90.74. Opened under the $90 level, rallied up to 90.74. Just from a technical formation, when you get a pop off off and open like that, and then it comes back down to that level, I don't like it under 89.80. I just that would you gotta go down to 89.47 to fill the gap, and 88.58 was the close. So hold it. You bought it off the open, and you got the pop here. Just made a new low though in Tiffany. So do not like to see stock open rally $1 and then come back down through that level. Boom, boom. S&P's right back down at the pre-market low. We just hit 1786 and a quarter. 4-point bounces dissipated here. Could not get up through that double close. So right back at the low. We're looking for a rangy kind of day. Nathan is popping in with EA. I had not.
Electronic Arts.
Yeah, and seems to be. Let me see if I can get this system to pull it up here. Maybe Nathan is thinking of buying some gifts for his cousins or nieces or nephews at this store. Boom, boom, EA. I never play those games. Do you ever play any of those, like, Madden? Isn't that the company? Don't they do Madden football and stuff?
They do a lot of sports. They also do a lot of the shooter games that are popular now. But me personally, not really a big console gamer.
Yeah, either our other people here, as the stock has made a new low for the move, took out yesterday's low at 21.36, got down to 21 even. Nathan, this is not a good looking chart here. You got to go a little bit farther out to find support. I mean, you did hit this $21 level. You hit 20.95 on June 14th. That absolutely has to hold here, or you got to slide down to the $18 level. So EA not looking good, daily, weekly, or monthly chart. We're going to leave you guys just as the S&Ps are making a new low on the session here, 1785. Perhaps Dave's Moenning call on the state of the markets is coming to fruition here. 1777.75 was yesterday's low. Let's see if the slow leak here in the S&Ps can take it to that level. Thanks for the participation. Thanks.
Joel, hang on. I think you need one more little teaser for the webinar today. I think it's kind of a big deal. I feel like you've been sort of downplaying the webinar. I'm kind of excited about it. I'm not gonna lie.
Okay, we're going to be doing a webinar on information arbitrage, and it's kind of a combination of all the things that we talked about in the shows, putting it into concise form. So if you have time, we're going to be doing that at noon today. Lunch will be served, but it will be served by us.
That's right. And if you don't come, Darth Vader will hunt down your home planet of Alderaan and blow it to smithereens for all you Star Wars fans out there. But he'll probably make a special guest appearance. So don't miss Dennis and Joel's information arbitrage webinar this afternoon, noon.
Dennis did put the link for the go-to webinar in the chat a little bit earlier, and then Nathan, thanks Nathan, and also Drew both threw in a couple links for you guys there to get to those locations.
And Joel, how much does it cost?
Free.
It's very expensive. What? It's free?
Everyone,
Wow.
You know what? Everyone will pay for free. That's the number one rule of of retail. Everyone pays for free.
Everyone pays for free. All right. Excellent.
Okay, folks, have a good trading day. We'll be back with you tomorrow.